So I'm going to get started. Welcome everyone. Plus EV, up to you. I'm not gonna tell you yes or no. I'm not telling you whether to sell Bitcoin or not. I have no idea. All right. I'm gonna be going over time and kind of the nature of time today. So again, a lot of you, how many of you guys have like seen people on Twitter? They're like, "Oh, time precedes price. Time's better than price." But they never actually say why. Like they just say it and they try to look cool. Like, oh, like no shit, time's better than price, but why? Like no one ever explains it. Right? How many of you guys see that? Or in Discord, I mean it's like, oh, time. Yeah, they always say, oh, you lost a trade because of time. Blah blah blah. So yeah, I'm gonna be going over time and why it's so important. And I remember the first time I ever really realized time was important was I saw this thread by this random crypto dude on Twitter, and he was talking about like the nature of the London kill zone, New York kill zone, and Asia kill zone. And he kind of talks about like what each one should do. And I went back in the chart, and it wasn't like 100% of the time, but the majority of the time, what he said each one was gonna do, like it was very spot on. I'm like, that was the first time I ever realized like time was so important. That was a nice play, flips. That was like a confirmation setup right there. All right, so Reek, why did you change your name? All right, so I'm gonna start going over. You guys should know what the kill zones are. So if you don't know the kill zones, let me just mark them out real quick. So these are the kill zones. If you want to follow along, the indicator in your chart you can use to draw these is it's just called Killzones, and it's by this guy named @Joshu. Okay, so if you just type in Killzones, it's this one right here. Okay, that's the one I'm using for this video. Do you guys see this? So if you want to type in this kill zone, okay, and this is what I'm going to be using. So when it comes to kill zones, all right, if I'm gonna actually draw these encrypted real quick, because I want to kind of see if they, because you can see like without me saying anything, you can, if you look closely, you can tell what happens in each one. I'm gonna see if it's the same for crypto, and I'm gonna put a side by side chart so you guys can kind of see this right here. What am I doing? Sorry. All right, kill zones by this dude. Gonna go to the 5-minute chart. All right, let's see if it's the same thing. Okay, this is the weekend, so the weekend doesn't count. Yeah, AM. Okay, so definitely is interesting here. So I'm gonna put a side by side chart of Bitcoin and NQ, and I'm gonna see if you guys can like. I'm gonna see before I say anything. I'm gonna see if you guys can kind of point out some differences of each kill zone without me actually saying anything. Yes, this is gonna be recorded. All right, so I'm just gonna put a little chart here. I think it's actually better to do this method because this is much easier to see. All right, so here's some kill zones on each chart. I'm gonna actually go back. I don't want to start at Saturday because obviously on Saturday I don't care. All right, tell me if you guys see any like. I'm gonna actually full screen this. So look for some differences between each of these. Okay, try to look for some similarities and differences. Your goal should be finding what is the same between each kill zone on both charts. It's not gonna be very different on It's not. There's no difference between Bitcoin and NQ from what I'm looking at right here. See if you can find some like observations from each kill zone here. This is a reply post, so make sure you guys are replying some answers. Again, I'm gonna go over what I'm gonna teach you guys eventually, but I want to see what you guys can pick out here. Not SMT. It has to do with time. Okay, this is time based. Okay, what do you notice what do you notice about price during like these kill zones on bull charts? Give me some observation. For example, Asia kill zone generally does this, blah blah blah. New York PM session does this if so and so does this, blah blah blah. Do you get what I'm saying? Okay, so New York retrace, London expands. I like it. I like it. Asia accumulation. Yep, that's Asia's typically accumulation. Yep. Yep. There's a lot of difference between liquidity sweeps and the higher volatility between each one. That's right. Asia sets high and low. I like that. I like that. A lot of power threes going on in here. So you guys are, for the most part, getting all this right. Okay, now, so I'm gonna be showing you guys what I see, okay, and what I've learned from time and why it's important, okay. And I'm gonna be going how you can actually use different liquidity pools for both London and New York, okay, and I'll kind of explain how to do that. But first things first, Asia generally consolidates. Okay, why does ICT say not to trade Asia? Why does no one trade Asia on the timeline? There are people who do trade it, but why is it not common? Well, Asia consolidates, okay? Asia is these little red boxes. Okay, if you look at this one, consolidation. Look at this one, a lot of consolidation. We don't really expand beyond liquidity. This one actually expands more than usual, but still a lot of consolidation. If you look, like, we kind of stay in between this high and this low the whole time. Like, we're still consolidating between these. Okay. Same thing with this one right here, and then Q. What do you see here? Consolidation. So again, if you were just to go back and just look at all the Asia sessions, 99% of the time it's just going to consolidate, okay? And this sets the range, okay? This sets the range for London. All right, so you can see this again. If I'm assuming a lot of you knew this, but is this actually news to anyone? Like, is anyone actually did not know Asia usually consolidates? I know this is probably common knowledge to a lot of you, but don't worry, this will get more advanced. Did anyone not know Asia always consolidates? And hopefully you can see it just always consolidates here. Consolidation here. Consolidation here. Consolidation here. Consolidation here. If the market wasn't truly time-based, why would the market just consolidate every single time we have Asia? Like, if the market wasn't time-based. Like, that just proves that the market's time-based, okay? So you can clearly see, again, New York consolidates, or Asia consolidates. Okay, let me turn off the Bitcoin chart now because I don't really want to go on that. But again, pretty obvious that Asia will consolidate every time. All right, yeah, but stocks start trading when London trades, Stungo, and London is much better, Mr. King. So obviously the first lesson is do not trade during Asia. Again, I know there's a lot of you who, how many of you guys first came to futures and you're like, oh, I can finally start trading futures. You could trade 23 hours a day. And you were like so tempted to like just take overnight trades. Like, you're about to get in bed and you're like, oh, I'm going to take a trade here. I swear that happened to all of us. Did it not? When I first switched from options, I was like, oh, futures, I can trade 24/7. And I remember when the market closed, I tried to trade to act all cool, and I didn't understand that you shouldn't trade. And I kept wrecking myself. I'm like, dude, why are these plays failing? Like, I was just so eager to trade, but I quickly learned, I'm like, okay, never mind. Maybe you shouldn't trade it this time. But yeah, again, I used to do it all the time. Again, we're all probably guilty of it, but yeah. Yeah. So again, there's not a lot of volume. It's usually going to consolidate. So for my London traders here, how can you use Asia to trade London? Yes, use the liquidity. Yo, what's up, Elias? I haven't seen you in a while. So for anyone who doesn't know, usually when we have Asia session, you want to mark the high and low of that session. Okay, and then if you're going to trade London, all right, you're typically looking for a sweep. Okay, so you can see the London Killzone starts here. You're looking for a sweep of a higher low, and then you're looking for some sort of reversal. Now, keep in mind, I'm not going to worry about where the draw is. At this time, the draw on liquidity was up here, so we won't really want to sweep here anyways. But for the sake of not looking for the draw on liquidity, all right, do we see a short setup here once we sweep this Asia high? Yeah, exactly. We don't see a short setup here when we sweep this high. Why not? Well, for one, we respect this for rally gap. We don't get an IFEG here or anything. Right? We clearly respect it. You don't get any market structure shift here. You don't get any market structure breaks. Just you don't get anything. So will you always be able to take a setup off Asia high or Asia low? No. Okay, it's not gonna be like that every time. You're not just gonna have Asia high and Asia low and be able to take a setup off them. It's not gonna. If that was every day, then the market would be too easy because then everyone would do it. But the key thing is you have to look for a model off of one of these highs or lows. So if I'm trading the London kill zone, okay, from right here, and I'm looking for some sort of short because we swept Asia high, well then you're obviously not gonna. There's no short here. There's just not a short here. I don't know. It's pretty obvious. There's no short here. There's no market structure shift. There's no nothing. So again, that just shows it's not gonna happen every time. Okay. I think this might have been an SMT right there. So I'm just gonna go to another example. So here's a better example. Okay, I bet you I'm gonna go in the replay mode. So here we establish our Asia high right here and our Asia low right here. Okay, so if I draw these out to the right, okay, here's the start of London kill zone. Okay, do you guys? So here's the start of London kill zone. Okay, so at this time, when London Killzone started, so here's 150. Here's 2 o'clock. Here's like the start of London Killzone right here. Okay. Now, when London Killzone starts, would this be a valid short right here? Because we did sweep Asia high. Would this be a valid short? Because we did sweep Asia high. No, why not? Yeah, it's not a kill zone. You have to wait for the London kill zone. Okay, so in the first example, it almost looks like, well, okay, we finally swept Asia high. Now you look for a short, but no, you can't yet because you need to wait for London to start. Because again, this short will work and it does, but generally it's going to be a much higher probability during the kill zone because that's when all the volume comes in. You want to trade with volume. Okay, now here's where the kill zone starts. Here's 2 a.m. Okay, based on what I just told you, okay, we see that Asia sets a high and it sets a low. We already took out the high. Now he took out the low here. So what would you be looking for here? What's up, Uncle Rob? Yeah, I've been good. Yeah, you're looking for some sort of market structure shift or some sort of long setup or just anything or an IFEG. Okay, does it matter what you look for here? What are you looking for here in general? In general. Starts, come on, someone's got to get it. What is the super easy answer? Like, what in general are you looking for here? It starts with an M. Yes, a model. Tristan got it. You are looking for just a single model here. Does it matter what your model is? No, because everyone's going to be different. Everyone likes the IFVG. Everyone likes the 2022 model. It doesn't matter. You're just looking for a model. Okay. True or false? Everyone should be reading liquidity the same. All right. True or false? Everyone should have the same model and be looking for the same entries. Okay, yes, good job. All right, I'm going to say the question again. True or false? Is everyone using the same general liquidity pools? Yes. The answer is yes. Okay. When it comes to liquidity, everyone should generally have the same highs, lows marked out. All right, you're going to look for the displacement under and higher low. When it comes to a model, okay, you can do any model you want. I'm not going to force you to do whatever model you want, okay? But when it comes to like looking for Asia highs and lows, am I just going to say, oh, Asia highs, Asia lows here, so I'm going to use this liquidity pool? No, Asia high, that's just not factually correct. Like, this is literally Asia high. Everyone should have this as Asia high. That's not going to be different amongst your charts. Like, everyone's going to have this. Okay, Asia low, I mean, sorry. All right, and this is going to be Asia high. Okay, it's not going to change. Like, everyone's going to have the same high and low marked. It's just a model that's different. Okay. So, again, we have Asia low now. Okay, let's see if we get a model here. So, what could be a probable model we have here? Yeah, this is really easy, but yeah, IFVG obviously, because again, it's a singular bearish fair value gap we have sitting here. It's a pretty good size, pretty tight stop loss if we close over it. So generally, I'd be looking for something like this. Now, I'd probably target maybe like this high. It's just one of those abnormal wicks, and usually these abnormal wicks are like decent liquidity pools. And by the way, Travis V5550, how about that Cowboys game? All right. So you can see just this is an abnormal wick. Okay, it's gonna be a good liquidity pool. I mean, if it's really up to you, but you can target the high. So this is actually another gem. I really don't say this a lot. I don't like to target the highs that took out other highs. Does that make sense? I just don't like to do that. I don't really say that a lot, but I have a hard time targeting highs that take out other highs. Do you see how this high took out this high? So like sometimes I don't know. I just like this high better. It feels more safe in my opinion. It's like, okay, this is a normal wick. We have an inversion. Just I'm more confident we're gonna hit this high. And it's still 2.25 R. Someone DM'd me over the weekend. They're like, dude, like I don't really like scalping. I like going for like 50, 100 point moves. Does it matter what the points is? No, it doesn't. Like it's the same R. Like this could be a 100-point play or a 10-point play. If you're risking the same, it's gonna be the same money amount. Okay, so it doesn't matter. So again, this is just a decent play. So let's see if we get a close over. I already know what happens here. So we get a close over. We can. So you don't have. So now the risk reward is much worse here. Actually, it's a 1.117. Okay, but this is again for IFVGs. It all comes down to preference here. This is where you can actually wait for a retracement if you'd like, but sometimes you're not going to get it. So let's say we get a close above there. Well, I'm thinking, okay, well, this is going to be a 2R. We took the Asia low. I'll try to wait for a retracement here. Okay, and we do get one. So this is the one where we do get one. And I just target the high. And again, I would sell here. I probably would not hold till here. I don't really like targeting the highs to take out other highs. But you guys get the point. So see how we kind of use Asia high, Asia low here. We come in the London kill zone. We wait for one of these to be taken out. And in this scenario, we took out the Asia high, and then we took out the Asia low, and then we entered the London kill zone. That's when you look for a model because now the Asia low is taken out, so we look to go the opposite way. That's how you use Asia high and Asia low. Are we actually trading Asia? No. We're letting Asia establish our highs and lows, and we're letting it create a range, and we're using that range to trade London. Okay? Because I don't want to go on a lower time frame. Half of these people probably don't even trade the 1 minute Quasimodo. So, do you guys see it? Does this make sense? Does this not make sense to anyone? So again, you're waiting for, you're not trading Asia, you're waiting Asia to establish a range, and you're waiting for us to purge one side and then go to the opposite. And you're not gonna see us go the opposite every time. Did we have to get an IFVG here? No. What if we rejected it? Well, there would have been no setup. There would have been no structure or no framework telling us to go long here. Does that make sense? Like, it's not going to be a guarantee that we're going to get an opposite setup every single time. Okay? This is sensational, man. I swear. Sensational. Sensational performance from Dodgy's DD. All right, so again, just you're not going to get the setup every time. In this example, we end up doing it. And again, it's up to you whether you want to wait for the retrace here. Honestly, if I'm going for a 2R here, you're not going to see me market buy this. Like, if I'm going for good R, I will wait for the retracement here. And this is another little tip. If you're going for a 2R, do you have to put it inside the IFVG? No, you don't. You only need a 2R, so you only need a retrace right here. It doesn't have to be in the IFVG. So I'd actually put my limit here if I'm going for a 2R and not put it in here because there's no point in putting it here. I'm not going to go for 2.67 and risk not getting filled. I'd rather go for a 2 and have a better chance of getting filled. Okay. So, again, that's just, again, how you trade Asia and London. Okay. Now, let's go to the opposite. So, now that we've understood how to trade Asia, if you're a London trader, right, you're just waiting for the high and low to be taken out. Okay. Now they understand that. Okay. By the way, this is one more example if you guys can see. This is actually a really good one right here. So we establish our Asia range. We put a high in. Okay, we put a low in. All right, so we take out the high. Now what? We look for a short setup. Okay, does anyone see the short setup here? Yeah, I think there was, Elias. Yep, so there was a short setup. It was right here. 2022 model, baby. So we take out our Asia high. We don't even touch the Asia low. We take out our Asia high. This could have been the short setup. But the fair value gap does not close under, so therefore it is not a short setup. Okay, see how the fair value gap respects this? So again, no even though we took out the Asia high here, there's no opportunity for us to go down here. Okay, there's just none. Okay, if you short this, you just can't short this. It's just not possible. Like, there's nothing here to short. Okay. Now, you're probably thinking like, oh, why don't you short like this for IFVG? Why don't you short like this IFVG or whatever? I don't even know. Why don't you short any of these? Don't say chop because, yeah, no shit, this is chop. Why do you not short any of these? Actually, the time was fine. It was London Killzone. Yeah, there's no market structure shift here. So it's not that it's choppy. Like, again, it's obviously choppy, but until we get a market structure shift, there's just no short here. Okay. And then here's your first clear market structure shift. We break the low that takes out the high. Okay, like there's your market structure shift. So this is actually one I like a decent amount. Okay, so we get that market structure shift, and then again, all you're doing is you're taking that stop above the high, the fair value gap, you can see right here, and let's say you want to go for 2 to 1 or 1 to 1 or whatever. It ends up hitting It ends up just hitting about 2R. Could you try to go for Asia low here? Yeah, sure. But again, that's just RR traders. This is probably more of an RR trader type of trade. But for me, obviously, you guys know what I do. I like to scale a lot by 2R. Like, I'll probably be mostly scaled out here, whatever it is. Or I'll just go for like obviously equal lows, whatever it is. So I would go for these, which obviously fails to hit, which is surprising. Or I'll go for like this. So I'll take partials here and I'll move myself to break even. So like for me, this would have been a winning trade. This would not have been a winning trade for everyone probably. It honestly just depends on how you trade. Like if you're happy with taking 2R here, that's a win for you. I can't say this is a winning trade or not. I can say this is a winning trade for me. But there's going to be people in here who are going to target here, not move their stop to break even, and they're going to take this L. Again, I don't prefer trading like that. I like to take my wins. I like to take partials. So for me, like this would be a winning trade. I don't always target 2R. I like to target liquidity, Khaled. But as long as it's 2R, like I'll usually I'll be out, and then I'll hold like a few runners. So again, nothing really, there's no really siren that goes off. Like a siren goes off in my head for this. Like it's like, oh, this is a perfect setup. But we never break it. We never close underneath for a VI gap. And then the next time like the buzzer in my head really stands out is like right here. It's like, okay, finally we got some displacement. Like this would be a good setup for me. So again, that's just another example of, again, we draw out the Asia range, right? And then like the main thing I'm trying to make you guys understand for this class as a whole is, when do we actually get the expansion? When do we actually get the textbook setup? We always get it during the kill zone. Okay, we don't get anything during Asia. This is just trash. But you can see we always end up getting it inside the kill zone. Okay, so this is like the main thing that you should remember. If you could take away from one thing from this class, it would be this. So now that we know how to trade London using Asia, how do we trade New York? How do we trade New York using London? Same thing. We're looking for the London kill zone high and low, and we're waiting till one is taken out, and then we go the opposite way. Okay, does that make sense? Does everyone understand how it's the same kind of method? Okay, now I'm gonna zoom out. Take a look at New York AM as a whole. What are some observations you can make about New York AM? Just looking at this chart. That's where it all comes down to bias plus EV. So obviously if we'd equal highs above, I wouldn't look for a reversal, but that's a whole different class. Yes, New York moves like the most. Like it's like always moves. Okay, so New York, you can clearly see like every single time we have New York, just you can see just major expansion. New York AM, major expansion to the upside. New York AM, major expansion to the downside. New York PM, major expansion up. Okay, what do you... Let's see if I can point something out. All right, what do you notice about New York AM and New York PM looking at this chart? See if you can make any assumptions between New York AM and New York PM now. None of you guys are even getting close. I mean, not the answer I'm looking for. All right, Doc is kind of close. He says AM is smoother. Again, this is a little more of advance of an answer. AM is smoother is kind of actually close, but it's not what I'm looking for. Yes. All right, Zion's the closest. Zion, what about the opposite, Zion? You're almost there, Zion. Like what about the opposite? Yes, exactly. Vice versa. So what Zion said is he goes generally. He says big expansion during AM, lower move during PM. Same thing. If we have a if we don't have a big expansion in the AM, we usually get a bigger move PM. So just looking at this chart here. Okay, New York AM. What do you see in New York AM at this time? Yeah, just a bunch of chop. Well, what happens when we get to New York PM? Well, we had news this day. We get a huge pump. We have FOMC. Why do you think people say don't trade before FOMC? Because the nature of price is this in general. If New York AM is really, if New York AM expands, New York PM is going to consolidate, vice versa. So if the market knows there's news in the PM and the market knows there's going to be volatility in the PM, well then AM is going to want to consolidate because we're going to need to generate liquidity in the AM session. So it's not just don't trade before news, it's don't trade before news because the market's going to need to generate liquidity and chop around before the news comes out. And that's why we get that's just generally why we get a opposite of the opposite, right? Big AM move, small PM move, big PM move, small AM move. Okay, does that make sense, everyone? Again, will that be 100%? No, but will that be the majority of the time? Yes. So again, that's like what you should notice between New York AM and New York PM. Okay, you can just see New York PM just not. I mean, it starts off really good here, and then New York PM just finishes like trash here for the last like 2 hours generally. Same thing here. We get expansion here, and then we get New York PM, and then we kind of just stay in a range a lot more. So we kind of stay in a range here, and then New York AM just kind of just goes literally just one direction here. It just goes up the whole time. And then by lunch, we start to reverse. Okay. But again, that's, pretty key. All right. So now that we know that, okay, I'm just going to show you guys a few examples. So how can we use London Killzone to trade the New York session? Well, what we're going to do is mark out the London low and high. Okay. So for example, let's do, we can just do this. That's fine. So London finishes here. Okay. Where's the London low and high? London high is right here. Is it right here actually? Yeah, they're kind of similar. So I'll actually mark up both of them. So kind of similar. They're kind of relative equal. So you can kind of combine these a little bit. And then we got London low here. Okay, so we take out London low here. Does this mean we look for a setup now? Someone tell me why we don't look for a setup here. This is going to be this should make everything click. Okay, wait for kill zone. Why are we waiting for the kill zone? Yeah, because we get more volume. What happens when we get more volume? More volatility. What happens when we get more volatility? Why opportunity? Why is there so much opportunity? Yes, because that's when price will want to sweep the objective. It's not because it's more money. That's just generally when price wants to sweep the objective. That's when price will want to seek liquidity. Price doesn't care about liquidity most of the time between the start of New York session and the end of kill zone. Like it's not gonna want liquidity until we get that like 8:30. So here's 8:30. Okay, here. This is when price is like, okay, we're getting a ton of more volume. Now that we had the volume, now we've generated all the liquidity. Now price is going to want to go for liquidity. Okay. So you can see in this example, okay, this would actually be a long setup right here. Okay. Again, multiple reasons. Just it's a really obvious inversion. I think what ends up happening is it ends up getting wrecked anyways. But really obvious inversion. We took out London low. And the thing about this one that kind of differentiates from like other setups, in my opinion, is this one actually takes out London low way before the New York session starts. I think the best London high and low sweeps are when the New York session starts. Like sweeping the low and high inside the New York session. Again, it's still fine to take a setup if we swept the low already, but I think the best time to take like a setup is during that time. So if I go back in the replay mode, okay, we have our we already swept London low here, okay. We have kind of relative equal highs up here, not the perfect, but we have a high inside a fair value gap here. If anyone doesn't actually know this, I always say this all the time. This high inside this fair value gap is a great liquidity pool. It's a great magnet. Okay, price loves these highs inside of liquidity pools. So at this point, we took out London low here. Okay, have we taken out London high? No, so there's still a good chance we do. Okay, and this is where you look for your model when the New York kill zone starts. We take out London low. We take out the low that takes out London low, which is a double liquidity sweep, which I'll make a video on that eventually. But this is kind of a double liquidity sweep. This is your manipulation leg because we're taking out a low that takes out a low. And then we get our IFUG. And why am I interested in this IFUG? Why am I not being like, oh, this is a really good one right here? There's actually two reasons. Yeah, one is time. Okay, when does this occur? This occurs at 6:25 a.m. Is that really a prime time to trade? Not really, because the London kill zone is done by then. And then what's the other reason why mark out this one and not this one? Plus EV is probably the closest. If I back away from my chart, which one do you probably think I'm going to notice? Yes, Mike Lindell said it. Not obvious. Does this one really jump out at me? No, not really. This one is like, okay, this jumps out at me. Not only does this IFG jump out of me, but this displacement as well also jumps out at me. It's like, okay, this is actually a pretty good displacement. We have a really, really, really nice reaction here. All right, I don't know in live time if we're going to sweep this and go back up. Like, I just don't know. Okay, I'm not going to try to guess and be like, oh, I think we're going to go under and up. I don't know. I'm waiting for the reaction to see that's going to tell me. Like, this is a reaction where it's like, okay, now I see the reaction in live time. This is hindsight, but now this tells me, okay, well, if we get a reaction like this, I know this IFUG is probably going to have a good shot of working because, like, oh, well, in live time, we barely displaced below this low. So, again, this is just a really good example of this jumps out at you. We have displacement both ways. I like when the IFUG kind of has the displacement because it makes it really obvious. And then, again, really key liquidity pool. Would I probably be interested in this if there is not like a fair value gap here or not really low resistance liquidity? Probably not. I'm more interested in this because there's, again, 3 consecutive highs here. 1, 2, 3. And then also because it's inside that fair value gap to the left, which we know is a really good liquidity pool. So that, and then the combination of just this reaction off this low, right? And then, yes, this is a unicorn setup as well. Good job, mama. Again, just that, and then the unicorn setup as well. Okay, breaker here, right? When all these combine, it's just this is really high probability. And what I'll do here is, again, is this good enough risk reward for me? Yeah, I think so. Plus EV. Yeah, no. So for this one, usually I mark a buy in. For this one, I would not mark a buy in. I would actually just I would try to wait for a retrace to at least give me 1-to-1 here. So I would move it down and I would not mark it by this one. So we have our breaker, and then I'm not gonna go over breakers or teach them. That's just gonna be, again, I'm just gonna have the inversion mark. So again, we see our live time liquidity sweep. We took out London low, we left London high. So we look for a model. Does it have to be the inversion model? No. Just because this is an inversion model doesn't mean it has to be. This is technically the 2022 model as well. Why? Because, again, if I go to a line chart, do you guys see it? See how it's the 2022 model here? We get a market, we get a lower high that makes a new low, and we break that high with a lot of displacement. Does everyone see that? So it's a 2022 model, it's a breaker model, and it's an inversion model. Maybe you're taking off the 2022. Maybe you're taking off the breaker. At the end of the day, it doesn't matter. It all lines up. Okay? And I don't have to go to a line chart to see this. I'm just going to a line chart because that's how some of you newer guys are going to see this. Like, again, for a lot of you newer traders, you're not going to be able to quickly see this on a candlestick chart because you're probably just, it's going to be too messy for you. Yeah, exactly, Dadzilla. Exactly. So again, if I go back to the candle chart, again, this would be just another play I would try. I'd buy there, and then take profit would be there. So again, this one I actually would target. I would go for the London high here. What's actually going to happen in this trade is if I would actually get stopped at break even in this one. So what would happen is I would actually scale half here. I would target the rest here, and I would get stopped. See that? I would get stopped at break even there. I was kind of surprised this failed to hit. If you guys don't know why this actually failed to hit, it was because there was an SMT. Yeah, that's just why it failed to hit. So it was unfortunate, but that would have been a scale half and then get stopped the rest of break even kind of trade. So does everyone understand? Like, I think the main points of tonight were 1, Killzones go for liquidity. Market does not tend to care about liquidity outside Killzones. This is why we trade during Killzones, which is why time is important. This is the main thing to bring everything together tonight. No, it doesn't. There's clips of ICT saying when he looks for an SMT, he typically looks for SMTs between NQ and ES. Only occasionally YM, because he says the ES and NQ ones are much stronger. The Killzone times, again, you can just use this, but I think there's might be a, if you guys go in the study section, I think there's a Killzone time somewhere. All right, the Killzone times, it's I'll link it. Here's a copy message link, copy message. All right, here's like the link of the Killzone times. Again, people probably, oh yeah, just use FL chicks. That's fine too. So again, do you guys do you understand why time is important now? And when you should be trading and when the market likes to expand into that liquidity. I think 1 per kill zone is the best. Hey, hair. And if you're trading on like a 1 minute, you could maybe catch 2 or 3. But if you're on the 5, 1 is like, you're only going to want to try to catch 1. So again, super basic stuff, but a lot of people, like, I think the thing people don't realize is they hear time's important. They don't know why it's important. They don't understand that the market wants to run liquidity only during these kill zones. That's the part people don't understand, and that's not basic. Like, it took me so long to actually understand that. Like, it just went right over my head at the beginning when I started learning ICT. But you can see just how it's almost like the market comes alive. Like, if I had to give a scenario, it's almost like the market comes alive when these kill zones start, and it comes alive wanting to wreck everything. during, like, if we're in Asia, it's like, I'm just kind of lollygagging around, doesn't really want to go for high or low. It's like kind of just makes up his own mind. Yes, they do vicious crossbow. So again, there's Killzones and Forex as well. So the other thing, so you guys understand how that works. And then the other question before I get off here is, do you understand how to use one, Asia liquidity to trade London, and London liquidity to trade New York? I made that pretty clear, right? Again, I remember one of the struggles I had when I was a beginning trader in ICT is I remember I DM'd AM Trades one day because we're boys, and I DM'd him and I'm like, dude, why do you have like all these session highs and lows marked out? Like, how the hell do you use them? And I just didn't understand. I used to remember I marked Asia high, pre-market high, London low. I was like, didn't know how to use them. But now that I've kind of learned, I can really say, okay, well, you're using Asia liquidity for London, London liquidity for Asia, or London liquidity for New York. It's that easy. That easy. And that's all you need to do. Why did I mark London low at 4 a.m.? Because London low is at 4. Oh, wait. Because London low is at 4 a.m. The kill zone. Look. The London kill. I'm only marking the low inside the kill zone. The kill zone ends, and this is the lowest low in London. So you can see we end. This is the lowest low. Earlier I marked it at 3 a.m. because it's going to differ every single day. Like, in this London kill zone, the low forms right at 2 a.m. See how it forms at 2 a.m.? Right? 340 doesn't make a new low. This doesn't make a new low. This was the lowest time price went during this time. So it's going to be this low. Just going to vary every day. Okay, same thing with this one right here. The lowest price goes during this time period is this low right here, 435. See that? Okay, and then same example right here. We had a London low here, and that London low was taken out during the London session, and we make a new low. So now this is your London low. So before the kill zone ends, it changes from this one to this one. See how that works? It doesn't matter. If you're trading New York, you're not trading London. It doesn't matter if this happens because you're not looking for a setup in here anyways. You're probably dreaming about milking cows or something. Like when we're taking out this low, you're probably dreaming about milking cows. And then you wake up, your dream's over, and you're like, okay, well, I gotta get serious now and trade in the market, right? So again, it just, we don't care about this. I don't care if London makes a low here or there. I just care about what the lowest point is in London kill zone when I wake up. Yeah, or you're dreaming about you're dreaming about Steph Curry going to the Lakers. That's what I'm dreaming about. Yeah, if I'm only talking about the lows during the kill zone. If we get a newer low at like 6 a.m., I don't really care about that. I'm only looking for these lows and highs inside this time. Yeah, that was a tough game today, J-Lo. Humi, how to draw initial consolidations. That's not really a how-to. You can't do that. It's just, this is consolidation, and we'll get, again, I don't know how to explain it. Again, I'm not really sure what you're asking. You're probably talking about the market maker model. I'm gonna have to say no though, because I this is the only thing I was gonna do this class. All right, so that is it for today. Did you guys all get the email for my weekly email, whatever the hell it is, earlier? All right, perfect. Again, I'm gonna do like a trade recap next week. I'm hoping I take a loss this week. I know that sounds funny to say, but I'm hoping I'm gonna take a few losses this week, and then hopefully I can recap some losing trades, because I always recap my winning trades. Again, I haven't been able to recap losing trades because I just haven't lost. So, yeah, I'm gonna see if I can take a loss next week. We'll see. I'm on a really big winning streak right now, so I probably will if I had to guess, but we'll see. And then if I take a loss, I'll review that and I'll go over my thought process and I'll go why I was maybe wrong. Again, you should be finding a reason for why your trade might be wrong. If you're not finding a reason for why a trade might not be wrong, then you're probably not doing something right. You probably need to study more. So yeah, that's it for me. Again, thank you for coming to this session. And yeah, the only thing I would promote here is my merch. If you want to go buy some merch, go to announcements, scroll up a little bit, and then click the link in the merch. Get some merch. That's the only thing I'm gonna advertise. All right. Other than that, I'll see you guys later. Peace. Oh wait, also get an Apex account. Apex code Dodgy, 71% off. All right, bye.